Bitcoin bouncing back following a pretty steep drop last week of more than 40%.
Index has seen bull markets and bears over the years. Bitcoin, both a bull and a bear in the same day. The digital currency fell 2%.
Well, certainly if you've been in it, it has been a good investment. Bitcoin prices were at $1,000 at the start of this year. Now they're nearing 12.
Thursday's action was out of this world. I mean, the thing was on a one-way run.
Currency started trading futures last night on the CBOE. It has been a while.
Reporter Amanda Brandeis explains what Bitcoin is and asks the question, should you buy it?
Fundamental analysis of Bitcoin. One of the major concerns that instills fear in investors when it comes to Bitcoin is the lack of fundamental evaluation, similar to stocks and bonds. Compounding this fear is the extreme volatility and perceived randomness of the price. While certain metrics for Bitcoin exist, such as the role that Bitcoin plays as a currency form, Bitcoin transactions info, how many wallets there are, both existing and newly created, trading pools and their Bitcoin holdings, 21 million Bitcoin to exist versus the number of Bitcoin mined as a measure of supply and demand, trading volumes from Bitcoin exchanges, the number of Bitcoin exchanges and new exchanges, futures and options trading on regulated exchanges such as the Chicago Mercantile Exchange, BACT, and Intercontinental Exchange. No valuation model exists that can be used to determine the intrinsic value of Bitcoin. Similar to gold, without a coupon or dividend, typical discounted cash flow models fail, and there are no expected earnings or book-to-value ratios either. The price discovery is purely intuitive. Technical and socionomic analysis of Bitcoin. One of the major factors that highlight investment maturation and gives a basis for trading is when the investment in question can be technically evaluated. Bitcoin has been in existence for over 10 years now, and there has been sufficient trading on Bitcoin exchanges and in futures and options regulated exchanges that make technical analysis appropriate. When it was first introduced and was very thinly spread out, it was vulnerable to wide swings in price that made it very difficult to apply technical analysis to. Investors and traders in Bitcoin depend on a technical analysis evaluation of the price trends as their driver behind their investment. The theory is investment prices always move in trends, and by mapping out these price changes over a period of time, it should be easy to spot the trends. Bitcoin doesn't have the backing of gold or silver. It doesn't have the backing of a country or even a bank. Its only backing is sentiment, the collective views and opinions of traders, miners, hedge funds, and all other speculators. Welcome to the world of socionomics. It is this fact that we at Mshindi Bingwa Capital believe that Bitcoin is best evaluated using technical analysis, and more specifically, the Elliot wave principle, the graphical representation of socionomics. The Bitcoin price is not random. It is driven by social moods, which changes with time. The 5 tenets of socionomics. Social mood motivates social actions, and not the other way around. Social mood is endogenously regulated, not prompted by outside forces. Social mood is constantly fluctuating according to a hierarchical robust fractal called the wave principle. Robust fractals are patterned, but quantitatively variable. Social mood is unconscious and unremembered. Waves of social mood arise when humans interact socially. The process appears to be related to the herding impulse. Before moving on to the detailed analysis of the price, it is important to have a full historical view of the price from inception. The log chart overlaid on the linear chart shows a clear Elliott wave model from which we build upon to forecast future prices in Bitcoin. The Bitcoin price experienced wild swings in the first 4 years of existence. The initial price, from the establishment of the first Bitcoin exchange, is $0.003. The December 2013 peak of $1,200 concluded wave 1 of primary degree. Between December 2013 and January 2015, the price dropped to $164 for an 86% decline in price. This marked the termination of primary wave 2 and the first significant crash in price. What happened between January 2015 and December 2017 is for the ages. From the low of $164, price rallied to peak at $19,891 for a staggering 11,962% increase in price. Consistent with stocks, this rally to behold was primary wave 3. Intermediate wave 1 is a short rally followed by a deep pullback for intermediate wave 2. Intermediate wave 3 is complex, comprising of waves 2 degrees smaller. Minor wave 1 is simple, followed by a deep pullback for minor wave 2. Minor wave 3 is complex and is 2.6 times greater than minor wave 1 in price range. This is an extended wave. Within minor wave 3, minute wave 3 is 2.5 times greater than minute wave 1 in price, and minute wave 5 is 3.46 times greater than minute wave 1 in price. A key observation is that both minute wave 3 and 5 are extended waves relative to minute wave 1, and minute wave 5 traveled the greatest distance. Minor wave 4 is a simple but sharp pullback, retracing 50% of minor wave 3 in just 1 week. Minor wave 5 is complex and is 12.73 times greater than minor wave 1. This is an overextended wave. Within intermediate wave 3, minor wave 5 travels the greatest distance. Within minor wave 5, minute wave 3 is 3.57 times greater than minute wave 1 in price, and minute wave 5 is 5.31 times greater than minute wave 1 in price. Again, a key observation is that both minute wave 3 and 5 are extended waves relative to minute wave 1, and minute wave 5 traveled the greatest distance. In total, intermediate wave 3 traveled $4,798, 30.56 times greater than intermediate wave 1 in price. This is an overextended wave. Intermediate wave 4 is a quick and simple pullback, retracing only 41% of intermediate wave 3, but doing so in only 2 weeks. Intermediate wave 5 is where all the glory belongs. From the low of 2,981, price rampaged to 19,891 in only 12 weeks for a gigantic $16,910 rally. Intermediate wave 5 is 3.5 times greater than intermediate wave 3 in price. Before moving on to the big crash and bear market in Bitcoin, it is important to highlight some key observations and highlight key comparisons to stocks and commodities. In stocks, as observed by Elliot and later Robert Proctor, the third wave is the most common extended wave at primary degree and higher, with the third waves of lesser degree being extended waves themselves. In commodities, as observed by Proctor and also confirmed by the great bull market in gold between late 1999 and late 2011, the fifth wave is the most common extended wave at primary degree and higher, with the fifth waves of lesser degree being extended waves. Bitcoin, as observed, displays a tendency to have two extended waves in an impulse in waves 3 and 5 of minor and intermediate degree, between which wave 5 is always the overextended wave, meaning wave 5 of any degree seems most likely to be extended. This is very bullish, as the next bull market in Bitcoin would be for primary wave 5. Should the bear market low of 3,216 hold and the expectation of a greater bull market than we saw for primary wave 3 be realized, Bitcoin will easily exceed $23,000. This table shows the key relationships between price, the high and low, price traveled, the range, percentage changes in price, Fibonacci retracement, as well as time consumed by each wave. From the $19,891 peak, Bitcoin's price crashed to $3,216 in just under a year, for a spectacular 84% drop in price. Price since recovered to peak at $13,764 before crashing again to $4,001. The current rally is finding resistance just above 10,000 following the latest Bitcoin halving. This general sideways movement is consistent with a primary wave 4 triangle, although there could be a case that the advance from 3,216 to 13,764 is an impulse. For the triangle to remain valid, intermediate wave D must terminate below 13,764 and intermediate wave E must terminate above $4,001. For the impulse count to remain valid, price must hold above 3,216.